You will agree with me that your profitability in the forex market is subject to your technical analysis and your psychology. Alright, so in this video, I'm going to be educating you on how to properly analyze the market, how to properly do it in a way that it will increase and enhance your profitability in the market. Alright, technical analysis is one thing that is very important and very necessary to your growth and to your consistency and your profitability in the forex market. And not doing it right and not doing it well and doing it wrong is going to lead to your failure in the forex market. So in this video, I'm going to be sharing with you how to properly analyze the market, properly analyze the indices or whatever it is you want to analyze, despite your strategy, be it SMC, be it ICT, any strategy at all. This analysis or this way, this what I'm this all right, so what I'm going to be teaching you is going to help you despite of any strategy. Okay, so stick with me. You see the subscribe button right there on your screen, so please smash it, like this video if you got something or something valuable from this video. All right, let's get into the chat already. Okay, welcome to my screen. All right, so like I said, I'll be educating you guys on how to analyze like a pro, on how to perfectly analyze the market, how to analyze the market despite the type of strategy that you are using, be it ICT, smart money concept, support and resistance, any strategy that you are using. This is how to properly analyze the market. Okay, so let's dive right into it. So now, one thing you have to know when it comes to analyzing the market is that every time frame is important. No matter the type of trader that you are, every time frame is important. Well, this might not apply to scalpers actually, but swing trader, intraday traders, and day traders, even swing traders in short. This applies to every trader. Every time frame on this is important. Okay, so you are going to start from top to bottom. This is called top down analysis. Top down analysis. So now, what does the top down analysis help you understand, and how does it help you in the market? Have you ever seen? Have you ever been upstairs? Let's say in a building that has about 3 or 4 story buildings. That has 3 or 4 story. Okay, so and you are up there, and then you are seeing someone trying to park his car. But because he is inside his car, he's not seeing what you are seeing, that you that is above. Sorry about that. He's not seeing what you are seeing because you are above him and you are seeing everything going on perfectly. But him that is in the car, he's trying to figure out how to park because he's not seeing the view that you have. Okay, so this is what the top-down analysis helps you to do when you start from the higher time frame. It helps you see the overall structure of the market, to see where the market is going to be going in the future, where the market is pointing overall. Okay, so I'll be starting from the 1 month time frame. And mind you, this time frame is not for entry or where to you place your trade. It's for direction. It's for direction. It helps you know where next the market is going, or the overall direction of the market, the overall flow of the market. So this is GBP USD. On the monthly time frame, it is obviously what bearish. Obviously what bearish. Even the maybe can tell that this is a bearish market because we are pushing downwards. Exactly. So the only thing you're coming here to do on the monthly time frame is to see the overall push of the market, to see the direction of the market, where it could be going or heading in the next few months to come. Now, seeing this, you understand that this is only but a pullback. So in no time, this is definitely going to exhaust and start pulling down. Okay, because if you look at this, price has been printing lower lows and lower highs. Created a double top here, broke this neckline, and then it's coming back into this to create a what? A potential lower high to this previous high. Okay, so now seeing this, I am now seeing into the future that GBP USD is probably or has a very high chance of dropping in the next few months to come. Now I'm done on this time frame. I go to my weekly time frame. Okay, let me write that down. The monthly time frame and the weekly time frame is for your what? Direction. They are your directional time frames. So let me write that down. Week, sorry, monthly time frame and weekly time frame are for direction. Exactly. So your monthly time frame and your weekly time frame, they are your for directions. You don't trade on this time frame. You just look at it to see where the market is going to be heading in the nearest future, to see the overall flow of the market. So now I'm seeing from the direction of weekly and monthly that we are overall what? Bearish. But I'm going to be focusing on this part of the market, just this side alone. Just this. So with this what? We are bullish on this side. Okay. But mind you that on the monthly time frame, this is only but a pullback. So this is not going to last for a long, and it is going to start turning back and falling back down. Okay, so now I have this in the back of my head that GBP USD is going to drop in the next few months, weeks to come, based on what I've seen on the monthly time frame. So now you see that the monthly time frame or the higher time frames helps you to see what is potentially going to happen in the nearest future, so that you will know what you'll be doing now. Okay, so at the moment on the weekly time frame, we are bullish. We are trending bullish. We are creating the higher low and higher highs. Okay, so on the weekly we are bullish. On the weekly we are bullish. So now I have at the back of my mind that we are bullish on the weekly, and when you are trading you have to make sure that every time frame aligns before you take a trade. The weekly has to be bullish, daily has to be bullish, 4 hour has to be bullish, and 1 hour has to be bullish. And then you look for your entry to buy on the 15 minutes time frame after all these time frames are in line. All right, so seeing this on the weekly time frame that is bullish, I'm going to head over to my daily time frame. Now the daily time frame is for your zones. This is where you mark your support and resistance, especially as a day trader. You can, yes, of course you can start marking on weekly, but I prefer to mark on daily as a day trader that I am. Okay, so I'm going to edit this. Daily time frame is for supply and demand, or for key zones. Exactly. So the daily time frame is for your key zones. This is where you mark your recent zones that price is going to potentially bounce up from or fall down from. Okay, so now I start marking. I like making my chart very clean. This is a high, this is a support, which is a low, and then this. So I'm only going to be marking the most recent and obvious levels. Of course you can also mark all these ones, but it is unnecessary because this is still far. Before this is going to be happening, it's going to take weeks. So there is no point marking it now when it's going to take weeks. Okay, so on this time frame is bullish as well. It's bullish as well because we are printing the higher lows and higher highs. So it's bullish. Now, if I'm going down to my lower time frames, I'm expecting to see bullish behaviors. I'm expecting to see the market also bullish. All right. So this is basically just a pullback that is potentially going to turn back up because we are in a bullish market. Okay. So I'm going to mark this place too. Exactly. 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 So now once we are below this level, we are definitely going back to this level. Once we are below this one, then this is the next level target. Once we are above this one, then this is the next level target. And once we are still above this level, then it's going to be consolidating, just like it is doing right here, right now. But I believe that this is only but a pullback. Okay. So now after marking your levels on your daily time frame, you now go down to your 4 hour time frame. Go down to your 4 hour time frame. So because the weekly is bullish, daily is bullish, I'm not going to be taking any sell here because we are in a bullish trend. We are in a bullish market. Okay. So taking a sell here is risk because this is only but a pullback of the weekly time frame. It's only but a pullback. Okay. So you don't know when market is going to reverse and start printing higher highs and higher lows, indicating that the weekly time frame is reversing. So this is why you don't want to be taking sell when you notice that your weekly is bullish, your daily is also bullish. Let me show you weekly again. Exactly. So you can see that this is only but a pullback for a potential higher high based on what you have seen previously. High, low, higher high, higher low, higher high, and a potential higher low. So this is only about a pullback. You don't want to be selling yet until price starts kicking up or start breaking the previous lower low to indicate that the market is now turning into a bearish structure. All right. So now going down to the 4 hour time frame, which is where we were before. I'm going to delete this right now. As an intraday trader, you can also mark your levels on the 4 hour time frame. I call it the mini level time frame. The mini levels time frame. Let me get our text. Where is it? What happened to the text? Get over here, you. Hey, Lord. Okay, so the monthly time frame and weekly time frame are for your what? Your direction. And then your daily time frame is for your supply and demand. This is where you mark your zones when market is when if market comes to that place, it is potentially going to drop or bounce to the upside. Okay. So the 4 hour time frame is also for direction and key zones. But I call it my mini zone. So your 4 hour time frame is for mini zones. I call it mini zones. It's for mini zones. Okay. So now, mind you that I said that everything has to be in line. Since the weekly is bullish, the daily is also bullish. Then, if the 4 hour is not bullish, I'm not going to take any buy trade or any long trade until I see the market turning bullish in line with what the high time frames has told me. All right. So now seeing this, market is obviously consolidating inside these two levels. There is no direction. It's just moving sideways, which is called consolidation. Okay, my channel is not mainly for beginner traders. I believe that most people that are going to watching this channel is they are intraday traders, so they know what consolidation is. But definitely, I'll be explaining everything that I possibly can explain. Okay, so Even if I see any sell trade here, I wouldn't want to take it because the higher time frame has told me that we are in a bullish market and this is only but a reversal. This is the 4 hour is kind of bearish. So I can only take a buy trade when the 4 hour start taking a bullish turn. Okay. So now I go down to my 1 hour time frame to see how the market is. And on the 1 hour time frame, we are consolidating. We are consolidating. So this is a level that market has been failing to break below. Bounced one, two, three, four, five. So if you start breaking this level right now, yes, you might want to sell, but it wouldn't be a long-term sell because price is in a bullish market. Your sell will be lowest here and you are out of the market because you have in the back of your mind that the market is still what bullish based on the higher time frames. Based on the higher time frames. So you want to be on the good side of the market. The trend is your friend. If the trend is going up, follow the trend. If the trend is going down, follow the trend. The trend is like imagine a train coming with speed towards you. Are you going to stand in front of the train or you are going to join the train and go to where it's going? Of course, you are going to join the train. You are going to go inside the train and follow it wherever it's going. You're not going to stand in front of it. So when you are trading against the trend, it's basically you standing in front of a train, in front of a moving train. You are going to be crushed. You are going to be crushed for real. Okay, so as in the same way with the market, if you are trading against the trend, you are going to be crushed. You will blow your account. You will lose. You will just be losing. So it's better to be flowing with the market, to be flowing with the river of the market. If the market is trending up, then only be looking for your what long trades. Only be looking for what buy opportunities. Don't look for any sell opportunity, unless maybe you are a scalper. I don't like scalpers. I feel like that they are gamblers. I feel like they are gamblers. Scalping is I don't want to call it gambling because we are all doing the same thing, just different time frames. But scalping is just shit, bro. It's just shit. Okay, so let's keep going. We're on the 1 hour time frame. So seeing this now, I'm only going to be taking a sell once you break this level that has been failing to break below. And then my TP is going to be somewhere about here. And then this here for a 1:3 risk to reward. Basically, I love 1:3. I love it. I love it. So I'm not going to be holding this trade for long because I know that market is bullish overall. In fact, to have a higher probability trade, I should only be taking buys. I should only be taking buys. But I'll be in the flow of the river. I'll be in the flow of the market. I'll be flowing where the market is flowing to. If you say we are going up, we are going to go up. If you say we are going down, I go follow and go down. All right. Don't try to be against the market. Don't try to be to see a trend inside a trend. Don't try to see something that is not there. If the market is telling you bullish on the higher time frames, then best believe that it's going to be bullish, and that's what market is going to be doing. Okay, so all these time frames have what they are meant for: monthly time frame and the weekly time frame are for directions. So now, from the monthly time frame, you can see that this is only but a pullback. So now you have at the back of your mind that this is potentially going to be dropping in the next few weeks or months to come. And if you are seeing this rejection, you're going to know that okay, there is a bearish pressure or sellers are going into this market for it to close this bearish and then this month also being bearish, which is August. Then coming down to weekly time frame also, this is the pullback of the monthly time frame. But this pullback is bullish, of course, because it's printing higher highs and higher lows. Okay. Now look at this candlestick formation. This is called the tweezer bottom, the tweezer top. The tweezer top is a candlestick pattern that indicates sellers, that indicates that market is about to drop. So now scalpers will be seeing that this market is going up, but you who doing your top-down analysis is going to see that the market is only going up for a short period of time and is potentially going to start dropping in few weeks to come or even days to come. Okay, so your weekly, your monthly, they are for your direction. Then your daily is where you start marking your key zones. Is where you start marking your supply and your demand or support and resistance, whatever you call it. Okay, so now in the back of your head, you know that this is only but a pullback. This is the previous high, higher low, broke this and broke structure, made a new higher high. Now once we haven't broken this previous low, we are still bullish until we break this low. Then we have turned into a what? Bearish structure. But once we are still above here, then this is only but a pullback and for a potential higher low or equal low or bottom double bottom that will now potentially push the market up. Okay, let me make that drawing. Let me make the drawing. Once the market haven't broken the previous lower low, then the market is still in an uptrend. Let's say you see the market doing this, going up, going up. Now this is a bullish trend. Why? Because we're making higher highs and higher lows. Okay. Now once market is still above this place, the previous low, we are still what? Bullish. Even if it comes down to this place, we are still bullish. Although on the lower time frames, this is going to be a bearish trend. But once we haven't broken this previous lower low, we are still bullish and we are going to still go up. Okay, until we start breaking this level and then create a new lower low this time around and the lower high and then drop. So until we break this level, we are still in a bullish trend. Okay, so in the same way in the chart, this is the previous low. This is the previous low, and the market hasn't yet broken it. So I'm not going to be selling yet because we haven't broken this. If I'm taking a sell, it's going to be a short time sell. But in the back of my mind, I know that this market is overall bullish. One, because we are not broken this place. Okay, so now when you go on 1 hour time frame, I'm going to be waiting for this market to start turning bullish. Now, when is it going to start turning bullish? When price breaks this level, then retest, creating a higher low this time around and a higher high. Then you enter somewhere about here for a buy to the upside. All right. So that's basically. I don't want this video to be so long. It's already long already. So I will be stopping here. That's basically how you analyze your market. Let me just do a quick recap and a quick summary of what I just taught you guys right now. So your weekly time frame and your monthly time frame, they are for direction. It tells you where the market is going overall. And then your daily time frame is where you mark your levels, your support and resistance level, or your demand and supply levels. Now you have in the back of your mind what the higher time frames are telling you, that we are in a bullish trend or we are in a bearish trend. So if you're not going down to the lower time frames, you are going to be trading in direction in line with what the higher time frames have told you, so that you have a higher probability chance of winning the trade. Okay, so this is basically my teaching on how to do a top down or how to do your analysis correctly. Yes, of course, there are a whole lot of other things involved in making sure that you analyze the market well, like the trend lines, your chart patterns, Fibonacci, and all that. But I'm showing you the basics of how to do a top down analysis, and then the trend lines and Fibonacci are all extra. You can even be having a 90% win rate without having trend line, Fibonacci, and all those stuff. The main thing is your top down analysis to know the direction of the market, to know the market structure of the market, to know the market structure of that pair you're trading, and then trading in line with that structure. All right. So I believe you enjoyed this video. If you did enjoy it, please give me a subscribe, like the video, help me to grow this account, and let YouTube share it over to other eyes who will be needing this video. All right. So thank you so much for watching this video. I hope you really enjoyed it. If you did enjoy it, comment on the comment section and tell me what you learned, or tell me what you want me to teach next on this channel. I'm here to feed you guys with value. All right. See you in the next video. Bye, baby.